What is up, everyone, and welcome back to Taxel Starters, where we teach you the best tips on tax sale investing. In today's video, I'm going to teach you my tip on how to keep due diligence simple so you can increase your investment opportunities, increase your ROI, and increase your overall success. So, if you're just getting started or if you've been investing in tax liens and deeds, but you want to learn how to get the most out of your investment in time, then let's jump right in. Now, before I tell you my tip, there's one thing you need to know. Time is king. And I say this at the beginning of every video. And what I mean by this is if you want to succeed in tax sale investing, you need to make sure that you can sift through and research a large number of properties quickly in order to find your ideal investments, because picking the wrong properties increases your risk. And if you're dealing with liens or redeemable deeds, time plays a huge role in how long your investment can be sitting in a property before you can actually take possession or expect to make a return on your investment. At the end of the day, all you should care about is generating a return on your investment that will grow your money. That's why in today's video, the one tip I'm going to share with you is really to help you maximize your return without wasting time. That said, let's just dive right into the tip of the day. And that tip is, when performing due diligence, use the PVMEP model. So when performing your due diligence on your property, use the PVMEP model. PVMEP stands for Property Characteristics, Valuation, Mortgage and Loans, Environmental Risk, and Parcel Mapping. To keep this video as short and impactful as possible, I'm going to break these down, and I'm going to try to do this in under 10 minutes. But I'm going to recommend that you check out this video on how to conduct manual due diligence, posted up here, so you can get a step-by-step walkthrough of how to use this process. In that video, Rachel spends about 20 minutes showing you a template of what she uses of how they go in and do research manually using the PVMEP approach. Of course, there's other ways to perform due diligence, but for me, this is the best and fastest method. Be sure to subscribe to this channel and hit the notification bell. All right. For those of you who don't know me, I use TaxSaleFinders.com when I'm doing anything lien, tax deed, or tax lien related. If I'm investing more than $50,000 and only focused on tax deed, I use the TaxDeedBuyers.com. Some of you may be wondering why I only use Taxel Resource programs. It's simple. They are affordable. They provide everything I need on one platform. Institutional investors use them, and they've been considered the best for the last 10 years consistently by the tax sale industry. Remember, time is king. So let's just jump right into the tip of using the PVMEP method. P stands for Property Characteristics, which is the first step and by far covers the most information in one step. This includes basic property information, owner information, type of property, whether it's a single family property, whether it's a vacant land, the location of the address of the property, where it actually sits, the property class, and the mailing address for the property owner. Sometimes the property address and the mailing address are two different locations. The property can be in Florida, but the homeowner is in Alaska. You may want to find out how many bedrooms and how many bathrooms if you're investing in deeds and redeemable deeds, and you're really interested in owning the property. So if your strategy is 3 bedrooms, 2 baths, or bigger, and you come across a property with 1 bedroom, 1 bath, then obviously it's not a fit for you. Another way to sift through information is noting the year built. This gives you an idea of how old the property is and maybe the extent of the repairs that may be needed. You'll also want to have an exterior description and structure rating, which you can get in tax sale finders and tax deed buyers that you may not find as easily elsewhere. If you can't find exterior descriptions and structure ratings, you can always drive by the properties. However, not all of your investments may be in your state. Thanks to technology and Google Maps, you can see any property. Just be sure that the images you're looking at are recent. Viewing a property on any mapping system that is 5 years old does you no good. The property could have been burnt down or demolished. Okay, so that covers property characteristics. Remember, these are the things you want to look at because in the end, it helps you sift out properties that don't fit your strategy. I'll cover strategies in another video, but obviously understanding what you're looking to invest in helps you to quickly sift through a large number of properties. For example, if you're interested in single-family properties and you come across land, viewing property characteristics will make it easy for you to weed out the properties you don't want, which is why due diligence is relevant on multiple levels. Number 1, from the strategy perspective, it allows you to immediately filter out properties you're not interested in. 2, you can quickly dive deeper into properties that you are interested in and make sure that they are viable investments for you. Okay, let's get into the valuation, which is the second step of the PVMEP method. The valuation is going to help you understand the value of the property. You can get this information from the appraisers or the tax collectors. You want to pull the assessed value of the property and its history. You can see whether the property's value has been assessed higher or lower, what direction the market is going. Typically, you won't find the market value inside of the appraiser's reports or the tax collector's reports. However, you can use something like an MLS or Zillow type service to determine a property's market value. This is super important information if you are buying tax deeds, because you want to know how much you should be bidding on this property so that you can get the best value when you acquire this property at the deed sale. If you plan on selling it later, you obviously don't want to overbid the property, so value is a big deal. Now, if you're buying tax liens, maybe it's not such a big deal to you, but you still want to have the information. You also want to calculate the lien to value ratio. I won't cover that here since Rachel's video does a great job of breaking this down. Basically, understanding the amount of the lien that's against the property versus the value of the property helps you with strategizing, figuring out how you're going to invest, how you're going to bid at the auction, and determining the actual property tax amount. From there, you can go into other information like unpaid taxes and what's due. If you end up owning a property and it has 3 years to redeem, you're better off understanding what to expect if you end up paying taxes for the next 3 years. We'll talk about that in a different video. Now, the third step is M. That's the mortgage. You want to review property deeds, the transactions that have happened in the property previously. Depending on if you're doing liens or whether you're not doing deeds, you'll still want to know if someone else has an interest in the property. If there's no one that has an interest in the property and you buy a lien, there's a possibility that it will not be redeemed. However, say there's a bank holding a mortgage on the property, they're more likely going to redeem the tax lien. Depending on your strategy, that could be good or bad. Typically, they're going to make sure that they pay that lien and whatever the interest is. When I invest in liens, I look for properties that have mortgages. And the reason I do that is because I have a high probability that the bank is going to redeem the lien. And in my own personal strategy, I prefer the interest rather than the property. Whereas if there is no mortgage on the property, or say there are no liens on the property, then it's a high probability that the lien will not be redeemed. Again, it just depends on your strategy. Do you want it to redeem? Do you not want it to redeem to try to get the property? Again, we'll talk about strategy in another video. Next step is the E, which is the environmental risk. Now, this information is a little harder to gather. You may have to go through the EPA sites, which could be very costly to do. But the importance of doing the environmental risk is depending on your investment strategy. You may be interested in commercial properties or vacant land. If so, you wouldn't want to acquire land without knowing if it had some sort of EPA restrictions prohibiting you from doing whatever it is that you think you're going to do with the property because of some sort of environmental problem. So depending on your strategy, you may want to go deeper into environmental risk section. If you're using any of the Taxel Resource products, you'll be able to obtain EPA information easily without going to the EPA sites, which can again be very costly. The last step is P, and that is parcel mapping. Where is the property? Where is it located? What's around it? Are you buying a home because you're into single family houses, but around you or around this property are warehouses, which devalues the property and makes it not interesting? And that is why parcel mapping is very important. There you have it. My tip on keeping due diligence simple is use the PVMEP model. You want to research property characteristics, valuation, mortgage and loans, environmental risk, and lastly, do parcel mapping. Don't forget to check out Rachel's video on how to conduct manual due diligence, where she spends a lot more time breaking these elements down. So remember, when you're performing due diligence, keep it simple. Don't forget to check out taxselfinders.com, where you can get all the latest auction lists, research liens, deeds, perform due diligence, and much more so you can grow your investment like a pro. If you love this tip that I gave you on how to keep due diligence simple, then make sure you hit the notification bell, because in the next video, I'm going to make you put it into practice by teaching you tips on creating an investment strategy. I hope you have a great day, happy investing, and I'll see you on the next one.